here we're looking at the US 30, and as you can see, the market's sticking to the 15,500. At the same time, we're looking for the top of the wave 5 of wave 3. Once that's completed, then we can expect a wave 4 to come into play, which the 38.2 retracement level is around the 15.3 there. However, the wave 4 of 1 lesser degree, which is just in here, is around the 15,400 mark. So either from there or to here would be the aim there. In finding that particular high there, I've just been counting this little structure through here as such, but this little move down through here so far doesn't confirm that it's an impulse wave down through here. That is 5 waves, and that's not displaying yet because we've only got basically 1 to here, 2 to here, and this is the same for the cash market as well. So we've got a 3-wave structure there, so it's highly likely that we'll make another move to the upside for here. So I can't confirm this is in here. We're just looking for that at this stage. And the other point is that we're also looking for the first high above this 15,500 here as well. Once that's in place, then we normally get the ABC correction as such, which could come down to this level here, but we only see that as corrective and would see further upside at that point there. Right, this is the Dow here too on the 5-minute chart, and it just goes to show the structure in terms of that 3-wave structure here. So that makes it corrective. That means we should make a new high above here, but at the same time I'm not seeing a clear impulse wave up here. I'm seeing this is corrective as well. This is corrective to this side, so we're in a small corrective pattern, and it should break to the upside, but I just don't know how low it's going to come. When I look at the S&P 500 on a 15-minute chart, it's a slightly different story. We can see the 3-wave structure here, which makes it corrective, and we should be making a new high above here. And this has moved quite strong here, hasn't it? So we can really consider this like the 3rd wave, a 4th wave, and a 5th wave up to here. So we were looking for a target. We were looking from this 4th wave here up to a 5th wave up through here before we get all our sort of ducks in line here, so to speak. But anyway, I'll get to that later. So look, as this stands here, we should make a new high above here. So for any long trades here, we'd be looking at the 1695 as a tested support, or you can just buy new highs through here as well. Obviously the 1700s, going to have resistance there, and we can see that because it never made it here. So those orders, that supply would still be there. So depending on what news comes out through here, the news for tomorrow, well, the CPI figures tomorrow will be, for the China CPI figures, manufacturing figures will be predominant for Australia, but can also move these markets here as well. The European markets are, well, pretty much the same as well. One of the things is that the DAX may have the wave 3 high in already, and that goes for the Nasdaq as well, because on the Nasdaq we're seeing 5 impulse waves to the downside here. So some markets lead, some follow at certain times and so forth. So the DAX could be leading the FTSE here in line with the Nasdaq as such here. So that's one way to view this. The FTSE is more important though, if I can just find that here. The FTSE here, we were looking for, from this little wave 4 here, we're looking for a little wave, or wave 5 up through here in 5 waves, and we haven't made a new high here. So I'm still considering the, this larger correction here, wave 4. A smaller wave 4 in terms of the 1, the 2, the 3, the 4 and the 5 to move up through here. So, support on the 66.20 would be one step, but 66.30, the top of group 1, would be the other, and that will get you to 66.50, which is the resistance, which would be this little high here or close to it. Yeah, 47 there. So just still looking for another little move up there before we get this top of wave 5 of 3 in through here. And the Australian market can be quite similar to that as well. Let me just find my charts here. So what we were looking for here is that, we'd been looking for, well, from this point here up for wave 1, and that suits well, and back for wave 2, and then we've got 5 waves up here for the wave 3 here, and we were looking at this being wave 4 here, and I've got this here as a wave 5 here. So I'm a little bit sort of unsure what this is here, because the copper market was up quite strong last night, as was gold and silver, and the Australian dollar as well, and plus we've got those the China PMI flash manufacturing figures coming through, so they're expected to be slightly sort of positive as well. So I'm just a little bit sort of unsure of what we've actually got here. So it's really important just to keep the trading ranges small. Tuesday can open higher and trade a bit lower, but we do have the S&P 500 yet to make a new high as well. That and the stronger base metals and precious metals. Well, nickel wasn't that strong. In fact, nickel was actually lower. But copper is more important. But as I mentioned, getting here as well, we can start to see that the swings here are starting to, increase in size. So I think that we can just expect those swings, across the 5,000 to get larger as such here. But I think today, looking at BHP, we'll have a look at BHP and US BHP in a moment. But if we've have a look at the market depth in BHP and the market depth in CBA. If there's more buyers if there's more buyers and sellers in the market depth, well then that they'll be moving both to the upside, and you can just simply buy new highs from here as such as well. So let me just have a closer sort of look in here. I mean, this seems positive up through here, and this does seem like a little A, B and C through here, and this is starting to climb quite nicely. So look, I guess as long as it stays above the 5,000, you want to be on the long side with this. But like I mentioned, if you can get BHP and CBA going in the same direction, that's materials and finance, then you're going to get a stronger outcome for this indice here. If you've got finance going in one direction and resources going in another, well then you got that sort of push and pull situation sort of happening. So there's no strong lead from the US here, but we do have that stronger metal prices, which could be a real factor here as well. So alrighty, let's have a look at the metals. Okay, just starting with gold here. Gold's pushed up reasonably strongly through the 1300 here, and one of the problems we've got with this situation now is that this wave 4 here is moving a bit too high in relationship to the previous fourth wave, which from this point here we've got 1, 2, 3, 4 and 5 here. So we've got a nice clean 5-wave structure down through here, and we were looking for this to retest the 1300 here, even pop a little bit of above that, and then roll over from that point. And I'm still going to keep that there for a little while until this moves above the 1350. Then it's still plausible for this to be in here. If we've made a mistake, then the mistake would be that this wave 4 here is not here, this is not here. This wave 4 is actually to here, and this would be an A, a B and a C wave all squashed up into here, and this would actually be the 5-wave structure down through here to be the 5th wave down through here. So that's that's possible, but I'm just going to leave it how it is for the moment until proven otherwise, because and what I mean by that is we need to allow this to play out through here, and in that playing out through here, we need to sort of track the 5-wave structure to the upside. And in the 5-wave structure to the upside, we're looking at this being the A, the B wave here, and the C wave up through to here in 5 waves in terms of the 1, the 2, the 3, the 4, and then counting 5 waves up through here. So we need to allow this to play out at the 1330 there, which is the top of subgroup 1, but support on this will take it to the 50. Okay, so that's what we've got to be mindful of there. And in looking at just drilling into this on the 1 hour here, looking at this is up for wave 1 here, back for wave 2, up for wave 3 and 4 here, because there's a nice 5-wave structure in through here, and then the idea would be to count 5 waves up through there. Now I haven't pulled that apart just yet, but I've put that there because of the sharp turn there, but it could certainly have another little high in here as well, so just be mindful of that. The general idea was that a break of the the 1300 would, well, being above the 1272 was always positive. Well, we couldn't short it, put it that way, so it was between a sort of a rock and a hard place at the 1300 here, but while it had the 1272 as support, then it's it's positive to that side there, and a break of the 1300 would be the same, and that would be the same too on here as well. So if a support came in on the only breakdown in structure would be at the 1320 here. That's the pivot within group 1 here. So if we've got some sort of resistance here, then we'd expect further downside, and we could call that in at that point there. However, while that 1320, that pivot within group 1, is the support, well, then this trend is still moving further to the upside, and you need to sort of stay with that. So finding support on the 1330 would be the next sort of long trade from that point there. So just consider this the first high above the level. And because it hasn't stopped there, then it's likely to have the same distance to the downside. That's why I drew that out like that there. So yeah, so anyway, that's that sort of playing out. The copper market's also strong as well. It's moved up from the 1550 to the next target, which is the 320 there, and that's playing out there. I don't think that's finished there just yet, but the way I'm looking at this is just the 4-hour chart, but the bounce off the 300 here, or $3, is this is really quite a corrective move here as such. So it has to be labelled the A wave, and this is the B wave here. So I still consider all of this corrective through here. It's just how far it's going to go, but it is positive as well. So when we have a look at the sort of daily chart here, and I've sort of pointed this out before, is that we are getting higher highs here and higher lows here. So in essence, it is trending up. So, but at the same time, we're viewing it as a corrective move to the upside. But as it moves higher through here, then it's obviously going to take the BHPs of the world higher as well. So when we're looking at US BHP here, it's coming into the resistance area, and also the 61.8 retracement level from the last swing low here. So we can expect resistance at the 65 there. Support on the 65 after we've had a few swings. It obviously creates a more positive structure there as well, and that's something that we'll be looking at. The Australian BHP is also moving up quite nicely, and as I mentioned before, the 34 is the Fibonacci number, and it needs to be taken on board. So support here would see a move to the old highs here at 35 there as well. So we can expect a move higher from here because of base metals. The oil overnight was lower, so when we look at oil here, it's what I've done here as well I've changed the count slightly, and the reason for that is because just still expecting another high on the S&P 500. So I had this, let's just go over this for a second. I had the wave 4 here, okay, sitting there, and we're looking for 5 waves up here, which we've got, and that would have brought in that 5th wave here. But because the indice has got another opportunity to push to the upside, I'm looking at this being the wave 4 here, and this being a 5-wave structure for wave 1 here, an A and a B and a C for wave 2 here, and all of this being the wave 3 here, and this being an A and a B and a C here for wave 4. However, it really needs to stay above this particular level here, the 106.50 here. Okay, so it's sitting there quite nicely at this stage. So while that is support, then look for a move higher. So looking at, say, 107.50 is a lot of resistance there as well. So if we just bring it on the 20-minute chart here for a moment, we can see that the 750 cutting through here carries weight, so that as support would be a safe trade to the upside. When I look at the US sort of indices for gas and oil, this is Amex natural gas, and we'll have a look at Amex natural Amex oil in a moment. But what I can see here is that all these are positive wave structures to the upside. This move down through here is corrective, right? So that means that this high should be taken out here, and that would take us to the 800 here, and 800 is a major trading level, so it will have a lot of resistance at that point there, and we can see that this is still impulsing to the upside through here. So for natural gas to make another high, and this is a daily chart, sorry, and the oil market is much the same as well. Just bring this into picture, the daily chart here as well. So very much like natural gas as well. So I was expecting a new high to be made at this, above here as well, probably to the 144 there. So still upside here with these markets as such. So this would be just a wave 4 here, because we can see the nice 1, 2, 3 A, B, C for the 4th and up for the 5th there. So a 4th wave pulling back to the 4th wave of 1 lesser degree on the 1300 and a further move to the upside there for the Amex oil index. Right. Okay, that's that. And also wanted to ask as well if wanted to find out what people are trading in the soft commodities out there in terms of the grain, so soybeans, corn, wheat, and so forth. So if anybody's trading those, can you give us some feedback that you are trading them, and we may take them on as a regular chart in this section. Okay, let's have a look at FX. Okay, starting with the euro here, we're looking for wave 2 to pull back up through here, and we're looking, the textbook type of thing at the 61.8%, which is roughly around where these current highs are here at the moment. In searching for tops, it can be a little bit tricky. Sometimes it's clean and clear, and other times it's a bit iffy. So what we do know and what we don't know, well, this 132 here, the old high is resistance, and we can expect a reaction from the 132, and that would have been the target point for trading to the upside. So after the if we consider the trading levels classic pattern, then we would be looking for the arrival, which we've got here. Then we're looking for the reaction, we're looking for the support, and then we'll be looking for the first high above the level, and then we'll be looking at some type of correction across here, and then support on here, and then any further upside. That would be the sort of timing of the process and event. So that's what we're sort of looking at. So we still expect this to move a bit higher. Just how far is questionable. So just in drilling down into that a little bit further here, this move down through here so far is corrective. It's in 3 waves here. So at this stage it's corrective, and we could say too that at 131 here, in group 2 here, that while the market's above this, yes, it can come down and test it and so forth. But if it does that, then if the market comes down through here, if it finds the 72 as resistance at that point there, then you've got more of a bearish situation happening, and you would come down to the midpoint here, the 50, to check it in from that point. But if it does come down through here and japs down, then finds it as support here, then you would just trade long from this here, and you expect a new high above here. If it moves straight up through here and tests on here and finds support on here, then you can go long from that point there, because we've got that 3-wave structure there. But if it just depends on how this is going to grow here. Normally when you get the reversal here, the way to do it is to allow it to unfold. It doesn't always work out. It can snap back quite quickly like it did here, and not actually set up. But in this case here, it's set up quite nicely in an ABC, and then it's moved up through here, back up, above here, pointing out, and the same with this ones as well. So 50% of this one here, it's just snapped back. But so 50% of the time, we could say with the euro that this particular pattern here in this case will be the same as this one through here. So it's really trying to allow to identify what we've got down here in the first move down, the first swing down. We need to allow it to unfold, so we know what we have. And at this stage it hasn't completed yet. If it moves up through here and takes out this high here, then we know that this is corrective, and you can trade long from that point, but it needs to move back up above that. If it moves straight down through here, then we've got a problem. But if it does move down through and goes through the 72 and then develop support on the 72, then you've got a place to work from as well. So it's always safer to allow the first one to move down. There's always other opportunities to find to go long. You just got to kind of find them, and in this case here, yeah, look, I mean, even just buying new highs here would have done the job, wouldn't it? But I still wouldn't have done it myself. I would have waited until I was sitting on top of the 72 there. But anyway, you just need to allow this to unfold here, but we're expecting further upside. Another way to look at this too is that if we go to the US dollar here, the US dollar is sitting lower now, but it's coming to group 1 here, and in group 1 here, it's the 82.30 is the top of group 1, the 10.20 and the 30. So support on the 82.30 would be weakness for the euro. So while this is developing support here, then you don't want to go long on the euro just yet. So if we put this here at 82.30, the top of group 1 there, this here appears to be corrective here. So that means that we should make a new high above here. That means the euro is going to test lower through, lower down. This whole move here, A, B and C here, can be corrective. But if it finds support on the 82.30, then you've got a, then you've got, you'll be looking something like this, and you'll be looking for further upside here and further downside on the euro. So this is a good, using both markets and understanding what levels they're working through and what they'll be facing next, like the midpoint here, then it could be quite helpful. The Australian dollar is probably being driven now by commodities. Well, it has. We've noticed that copper has been firming up quite nicely. So this has all been firming up quite nicely. But I'm still staying with this particular wave count that we've been working in the day ahead section. The Elliott wave section will have a different count and is looking at a possible triangle on the 4-hour wave count here at the moment. But what we're looking for here is staying with it in terms of holding this wave 3 in here. This is a little ABC for the A wave here, the B wave down through to here, the C wave up to here, making that the A wave. This is a little bit small for a B wave, I admit that, but at the same time we need to sort of look at this situation as for what it is, and being above the 92 here, the pivot within Group 1, it does give it a positive bias. So we need to be looking at it to the upside. So just looking at this here a bit closer on the 15-minute chart here, what I've done here is that this current move up here, if this move down through here as an ABC for the B wave, that would be this B wave in here, a little ABC here for the B wave, and I'm counting this up here as a positive move up. So it is being driven by the metals, and I'm just counting it. I'm counting it like this. It does have a little 5 waves here for wave 1, wave 2, then a little 5 wave structure here for wave 1 here, back for wave 2, then up for 1 again on a smaller degree, back for wave 2, and this is also positive here. So we're calling this up for 1. So we've got a variety of different degrees of structure here unfolding. Yes, it could be counted as corrective, but it can also be counted this way as well. So let's see how we go with this. This move up here is also impulsive as well, and this move here is in 3 waves so far. So I'm viewing this as corrective, and I know the metals are coming off slightly, so we'll see how this goes, but still expecting the way to trade this is that if the 92.50 develops as support, then you can trade to the upside. And trading to the upside, the biggest problem you're going to have, the second biggest, is the 92.72, because you got 272 there, and I know it's going to kick in because it's come off here as well. So yeah, so if that gets support, then you're long. If not, well, then obviously it's going to come back as well. But we are looking for support for precious metals and base metals. They seem to be quite strong when you get a full moon, the same as the meat markets as well. And they're also turning points as well, those full moons. So we need to be mindful of that, which will be full moon today for us here on the US tonight. Right, okay, that's it. So with the robo trading today, then we're looking at gold, silver and copper for any upside there, basically resources. And the banks have been quite strong yesterday as well. CBA moving above the 72 area there, so it will be interesting to see if it can develop support on that. But CBA and BHP in the same direction will create a stronger move for the ASX 200, and as you know, the Australian dollar can lead indices as well, and we may be seeing this lead to the upside here in line with base metals. So alrighty, good morning and good luck.